Morning, everyone. I'm on a different computer here. The camera is so weirdly placed. Like I'm using this Huawei, and the camera is within the keyboard, and you like press the like little button here, and then it comes up, and you're just like looking straight up at me. So my bad. I don't know how to do. I like angle it up? That's even weirder. I don't know. But anyways, good morning, everyone. Hope everyone's doing well. And today we had the non-farm payroll numbers. It is Friday, right? To end the week. Let's end the week strong. We have the non-farm payroll numbers that we traded with our room live this morning, and we jumped in. And the thought process behind this was that you got two different ways the market can take this naturally, right? Good or bad. Realistically, it probably wasn't going to be a muted report based on the economic standpoint that we have, and also what's going on with the Fed, inflation, and the tightening cycle. So let's take a look at this. This morning, right, with the labor market, we had the expectation, right, 200,000 jobs to be added in the prior month in November. And the way that we were looking at this from a trading perspective was if we get a beat in the number, meaning that if you get anything above 200,000 a little more aggressively, you're probably going to see downside in the market. Why is that? Because it's deemed that the economy is strong enough and is growing at a okay pace for the Fed to actually tighten more aggressively and keep tightening fairly aggressively as the economy still holds strength. If the economy was weak, right, and the jobs added were really weak in the prior month, then we would have seen some upside in the market because the expectations were to be a more relaxed tightening policy, right? Right now, they're going 50, 75 basis points. But if we had that softer number, the expectations for slowing the tightening process, right, and slowing the rate hikes would have been accepted in that case. So that's why we got a little more downside in this market. We dropped fairly aggressively from the 40, 80-ish, I believe it was the pre announcement level, down about 60 odd points currently where we're trading at right now. So that's something pretty interesting, right? So we read you the numbers right now. 200,000 expected versus 261 prior month or prior edition. The 200 expected for November, 263 came out. The unemployment rate, 3.7 expected, 3.7 came out on par with the expectations. U.S. average hourly earnings, 4.6%, 5.1% came out. So that was an increase, right? These are fairly positive numbers, meaning that we have a how do we call it? We have a stronger, more accepting of a aggressive tightening policy economy per se. So that's something that we had to look for today, and the market did drop fairly significantly. We'll talk about some of the levels, but let's talk about what happened with the rail strike, right? The rail strike was avoided. The Senate has passed the bill 80 to about 15 margin that will avert a rail strike only a day after it passed in the House. And the measure now goes to the desk of President Biden, who had urged Congress to act quickly before December 9th strike deadline. So the legislation enacts a new contract that provides railway workers with a 24% increase in wages from 2020 through 2024. Immediate payouts averaging about $11,000 upon ratification, as well as an additional payday off to top off the existing vacation time. So remember what we had talked about? The railroads do impact about 1/3 to about 45% of the freights in the US, meaning that a strike could trigger a knock-on effect for many industries and become another inflationary threat, right? A supply chain issue threat. And it would likely cost the nation about $2 billion in economic output per day if things went off the rails. So we talked also about the chemical side of things, right? The chemical industry and the effects on that and how that would affect the economy as well. So to prepare for the shutdown, railroads even stopped accepting security sensitive shipments such as chemicals to treat drinking water, right? Very important. So that was evaded, right? This is the second time that I've read recently that it's been evaded. So we'll see how that progresses. Ideally, we don't have any more of that kind of weighing down on the inflation aspect and the economic strength as well. So naturally, we had Fed Chair Powell the day before. We had more Fed shares, and we were going to continue to see Fed shares. Today's a little shorter update, I would say, because today, naturally, 8:30, we had the non-farm payrolls. We have Fed's Barkin, Fed's Evans, and Evans again speaking today. Evans speaks twice, once at 10:15, another time at 1. Barkin at 9:15, and we have the Baker Hughes rig count at 1 p.m. today. So we do have some Fed speakers. I think the blackout period in the Fed begins sometime next week. I'm not necessarily sure, where we're not going to see a plethora of Fed speakers scaling in every single day, kind of shaping this market movement, like we saw with, what was his name? Bullard, right? Had a pretty bearish, he's a pretty big hawk stance in the most recent of his speeches. So with that being said, right, there's not too much else to talk about. I'm just looking at the levels here today. The levels, right? Let me take a wider stance at this. We finally dropped through the, remember we had the kind of higher 80, 90 realm last or yesterday, which was going to act as a very, very strong pivot. We had the 4105, huge ledge for the distribution block for price to reject from accepting above that area. And today what we've done was we've broken through yesterday's lows, which were at around the 4055 region, and have started a pretty strong descent to the downside, right? What we've seen here is we've entered into a new distribution block below the 4038 to 40. That's going to be a huge resistance. Also a very pivotal level that starts a new distribution block to the downside is going to be the 17 that we have to watch. And the 402526, I'm going to be trying shorts off 402526 if that area is traded here today, along with the 403840. I think there's a little more downside to come. The alternative aspect is that we actually hold the 4002 area, and we get a little more of the upside as traders might come into this and say, okay, you know what, this is pretty good news. Let's try to bid this up. I think the bid up in the morning is going to be attempted, so watch out for that. Don't be too biased. Just play these levels that I was talking about, and we should have a pretty solid end to the week. Having said that, thank you all for watching. Thank you, Ian. I appreciate that. Yeah, we did pretty well in the room today. I had 2 trades that did pretty good from that 26. And where do you get your news from? In the mornings or just generally? Because we're using News Squawk for pretty much everything. So yeah, go check out News Squawk, realistically, Gerald. And thank you all. Thank you all for the comments and coming and watching this. We'll see you on Monday the 5th. Right. So we'll see you on Monday, and have a great weekend. Thank you, and chat soon.